Hello, no mai, hoki mai. Welcome back to the final day of the Financial Services Council 2020 conference, Generations. I'm sure you've had a relaxing break following the calming tones of Jace Tapatu. Jace has such a story and an incredible vision for New Zealand and our younger generation. Be sure to practice his mindfulness techniques and maybe even the odd yoga pose on a regular basis to improve your own well-being. I have the pleasure of opening the final sessions of the FSC's 2020 conference. There is a choice between the final Generations session, focusing in on being better guardians, the second FinTech session of the day, which changes the focus from wealth tech to InsurTech, the last of 4 insurance breakouts, which features Dr. Rob Young, and the third investment panel, discussing human versus digital in the advice space. Thank you again to our sponsors, ANZ and Partners Life, for their support of these sundowner sessions. Once again, in all sessions, there is the opportunity for Q&A, so please take note and enjoy. Mā te wā.
No mai, haere mai, piku mai, kaka mai, tēnā koutou, tēnā koutou, tēnā koutou katoa. Greetings all, I am Jason Roberts from InsurTech New Zealand. On behalf of FSC Generations Conference, our session sponsors Partners Life, and FinTech New Zealand, I would like to say thank you all for joining us today. For this last session, we're privileged to have 5 guests on our panel, all of whom are actively helping drive sector innovation. In particular, we welcome our cousins from Australia, especially important partners considering the strong presence of Australian companies in New Zealand. We have enjoyed the active collaboration with InsurTechs in Australia and by extension the growing connectedness with our 12 global InsurTech Alliance partners around the world. For Kiwis, this connectedness not only exposes us to international innovation and insight, but it also helps open market opportunity, often so crucial to their success. Like all innovation sectors, InsurTechs have their own unique challenges, typically including the need to make sure they finally hone the relevance to their customers and consequently partnering successfully with incumbent and or other industry organisations. It's a constant challenge which I won't dwell on here. In terms of technology then, without doubt, data is a major focus point and an important technology driver to understand customers better, improve customer outcome, better price risk, and more. While larger sized owned customer data has generally played into the hands of established incumbents, new technology innovations in capturing and managing data insights using the likes of AI, machine learning, and customer data platforms are undeniably opening up new opportunity for the whole sector. I look forward to hearing more from our panel on these points today. I'll just touch on the partnering and sector growth just for a moment. What we have seen overall is that few InsurTechs are actually setting out to challenge, disrupt, or compete head-on with the more traditional insurance sector, but rather augment and add value to the various participants across the insurance value chain. Without doubt, the current climate has put a dampener on partnering opportunity and on capital investment, but I'm sure we can expect this to improve as the market emerges from the COVID cloud. However, like all challenges, adversity brings innovation, and without doubt, the growing interest in digital transformation, improving customer experience and addressing back-end efficiencies will only carry on and accelerate, with some in the industry already well positioned to exploit the growing focus on customer experience and value. Certainly those companies already on this path and those InsurTechs targeting these problems are accelerating competitive opportunity. Today we'll hear different perspectives on InsurTech with a strong focus on life insurance in particular. We'll also delve deeper into solution focus points that explore risk and actuary solutions, improving the claims processes, addressing customer retention and platforms that help the management and distribution in the group's benefits environment. Shortly, I'll introduce Vanessa Dobson. Following on, we'll hear from Julian Balasingham from our homegrown Kiwi success story, Montoux, Tig Murphy from inQuba, and then Aurora Voss, both of whom are joining with Vanessa from Sydney today. Completing the lineup will be Auckland-based Sentro, led by co-founder Frauenlob. At the tail end of the session, we'll open the floor for Q&A and general discussion. I do hope that you'll post your questions throughout the session, and we'll get to those as we go. Finally, I know many of you may be interested to pick up conversations with any of the panel afterwards. Please feel free to reach out anytime. Okay, that's my bit done. Let me introduce Vanessa. So our plan today, by the way, is to introduce each person and then allow them to have some time to explain more about their proposition, their company, what led them to get involved with the Insurtech innovations, and anything else that they think is important. So by way of introduction, Vanessa is the co-founder of Insurtech Australia and has had a long career in the life insurance sector, including her role of head of R&D at Munich Re. Insurtech Australia has global aspirations for all its members and has partnered with InsurTechNZ plus 12 other regions to form the Global Insurtech Alliance. ITA aims to strengthen alliances between regions and open doors for Insurtechs to partner and prosper. I'm looking forward to hearing from you, Vanessa. You've done a great deal of work with Insurtech Australia, and certainly we've enjoyed having you work closely with InsurTechNZ.
Thank you, Jason, and good afternoon, kia ora to everyone online, and especially to those in my homeland of New Zealand. I have missed visiting you this year, so bring on that travel bubble soon, I hope. It's very kind words from you, Jason, about Insurtech Australia, and we value our relationship with FinTech New Zealand in a great way, and we're always looking for opportunities to collaborate well across the Tasman. So today, in this opening session, I plan to cover off the following topics with you, and as long as my clicker is working, which I think it is, there we go. So these are the topics I plan to cover briefly in the next few minutes before we hear from our other panelists. So it has now been a decade since this movement we call Insurtech kind of began. And I thought it would be good to do a quick reflection on this past decade. According to one of the best sources of information in this space globally, and that is Willis Re, they released a great report in April of this year, which I would highly recommend. So since 2010, Willis Re has predicted there have been about 2,000 Insurtechs conceived in that time. But around 2010, there already were some organisations in play who would now call themselves Insurtechs. So there's probably about 3,000 in total. We know that of the Insurtechs conceived in 2010 or post-2010, about 770 of those have raised capital in various forms. And then also, of course, over the past decade, a few hundred have shut their doors. There has also been a shift in language, which Jason referred to earlier. In the early days of Insurtech, there was much talk about disruption, disrupting the status quo. Now, at least for the vast majority, that language has quickly moved into more of the collaborating, enhancing and enriching. So with that as the backdrop, I thought it might also be worthwhile just to have a look at the tech that has, the technology evolution which has occurred, which has enabled Insurtechs to sprout up, plus develop and deliver a variety of solutions. So this very simple chart there from McKinsey that shows you there that before column and the today column. I guess the challenge for incumbent insurers right now is that shift from that before column to today. The good news is that there are a number of Insurtech solutions out there who can help with that journey. In my opinion, the modular and ecosystem approach, the platform approach, are where the greatest value could still be unearthed for both incumbents and Insurtechs. This slide here is interesting for a few reasons in my view. First of all, it goes up to 2019, and as you could imagine, 2020 has had an impact in the insurtech space as it has everywhere else. But similarly, the buckets, the three buckets you will see listed there on the left, all of these insurtechs there are life-focused insurtechs, but you'll see that some of them play in the role of working alongside incumbent insurers. There are a couple in the middle there who have determined to underwrite life insurance themselves, and then others who are solution providers. And I think that's really key in terms of where life insurtechs play, really does determine their value, but also the impact on that part of the value chain, of course. Interestingly, in 2019, there had been a record $5 billion investment overall across the globe in insurtech, with a very subtle shift in that proportion towards life and health. 2020 is a different story. I'll come back to that in a moment. As Jason mentioned earlier also, while there are some startups looking to compete with incumbent insurers and underwrite life insurance policies on their own, most are being launched or have been launched in terms to modernise the incumbents and jumpstart future growth. In the 2019 year, those life insurtechs, which accounted for the largest proportion of startup funding, were those helping life insurers reinvent the onerous application process, which I'm sure many of you are familiar with, utilising third-party data, advanced analytics, predictive modelling, etc. In my opinion, based on a number of years of observing life insurers, there are parts across the entire value chain which can do with assistance, and which I believe many insurtech solutions can help with. Geographically, perhaps unsurprisingly, the US has really dominated the insurtech space in terms of both investment, but also in terms of the proportion of life insurtechs. London is arguably the centre of insurtech businesses and development, while China and India are probably the best examples of markets where they've been able to integrate insurtechs into the everyday value chain. Here in Australia, 1 in 5 insurtechs has a focus on life insurance. The final particularly interesting thing about that slide is Singapore Life, now called Sing Life. Now, if you ever want to see a story about perhaps the tail wagging the dog, Sing Life started in 2014. It is now arguably one of the largest life insurers in Singapore. It's purchased a majority of Aviva Singapore after purchasing part of Zurich. It's not a bad story for a technology-focused life insurer, only 6 years old. So having said all of that, who are those who are investing in the life insurers or life insurtechs? So which brings me back to the 2020 impact on investment overall. As at April, Willis Re reported a 54% drop in the total funding for that quarter. However, the insurtech landscape is still growing against other metrics. Over 50% of the investments were in early stage startups, which is interesting. However, the investment split between P&C insurance and life and health insurance is now the largest observed since 2016. Finally, when compared with 2019, investment from reinsurers or insurers and their corporate venture capitalists has dropped by almost 50%. However, so the question remains, who is investing currently in life insurtechs? I wanted to share one example here of New York Life Ventures. So New York Life is, of course, an insurer in its own right, but a number of years ago it set up this ventures arm, and you'll see some key metrics there showing what they have been up to. It's one example of an incumbent insurer who has changed their business model with a view to invest in insurtechs, understanding the value that they may bring back to their business and to their broader customers. a significant number of reinsurers and insurers across the globe are now setting up strategic partnerships with insurtechs. And they are typically partnerships where the insurtech's business model aligns very nicely with that of the incumbent insurer. And this may prove to be where the true value lies for incumbents that invest. A number of insurers have been outsourcing specific functions to insurtechs, sometimes typically cheaper, but potentially a little more risky than relying on those older and more established technology vendors. Now, I'm sure I'm preaching to the converted when I say that digital transformation will not wait for us as an industry to catch up. And so I want to talk a little bit about the partnership piece and that digital transformation piece in one go. Here in Australia, InsurTech Australia released a report earlier this year in partnership with EY, where we've done a survey of the market. And looking across all of the insurtechs here, about 2/3 of the market are seeking partnerships, seeking to solve problems for incumbents and thereby improve customer experience. And what I've noticed in the insurtech community is the focus on customer experience being really, really high up that list, if not number one always. There is an acknowledgement that we can do better for customers, and that's how they are focusing on doing that via digital transformation. I think it's fair to say that other ecosystems have shown us that part of an innovative approach is knowing when to acknowledge that we can't do this, so let's partner with someone who can. I've observed many insurtechs who have the capability to engage with customers in a way that incumbent insurers only dream of. It's easy to understand language, it's mobile, it's in real time, it's engaging, and it's transparent. And so I see that for those incumbent insurers who are struggling to do that, not through lack of intent or desire, but because of perhaps legacy drawbacks, this may be a feasible way to go. And just lastly, as an overview, my view is that when we do consider the types of life insurtechs that are being funded and the depth and the breadth of insurer and insurtech relationships, and the entities that are financing them, which tend to be the non-traditional. So whereas the VC, the venture capitalists, are funding many others, in the life insurtech space, it tends to be incumbent insurers and non-traditional investors. I think the industry is potentially being galvanized for a significant overhaul. I think smart life insurers appear to be aligning with insurtechs in order to reshape their value proposition. So I hope that is helpful for the discussion that's to follow, and thanks again, Jason.
Pleasure to have you represent your perspectives, Vanessa, and those numbers that we hear internationally, the 5 and the 7 billion, just dwarf our tiny little experiences down here in New Zealand. I think we did some research as part of your EY project for our own one, and I think we worked out there was, I think it was $40 million in New Zealand investment over 2 years, which for us seems like big money, but it's still very, very small in the big pot of things. Thank you anyway. Next, I'd like to introduce Julian. Julian is actually the sales and marketing manager or director for Montoux, and has been focused primarily on growing Montoux's successful business in Asia Pacific and the United States. He's worked in commercial leadership roles in the financial services sector in both Australia and Asia for the best part of a decade. I could personally consider Montoux one of New Zealand's insurtech success stories, not only having raised millions of dollars in investment, in itself quite an achievement in the small marketplace, but as importantly, they have opened up new markets with the life insurance focused actuary and risk solutions into USA and Europe. And I might have got that wrong, Julian, I'm sure you put me right. I believe more is on the way. So welcome, Julian. Thank you for joining us today.
Thanks, thanks, Jason, and thanks to Vanessa for that really useful bit of context setting. So look, I thought today I'd speak a little bit about the Montoux story. As Jason said, it's a really good one, and particularly I think in the last 6 months or so, and in the wake of some pretty turbulent economic times. It's an interesting story too about a company that's kind of mid a pretty exciting pivot. So for context, Montoux was formed in Wellington by some 3 Dutch surfers. Actually, the story goes that an actuary and a software developer who were both surfers went to a bar, and Montoux was formed. And it was formed initially very much with an actuarial kind of technology play in mind. So the idea was to solve, particularly for the pricing problem for life insurance, which for those that know, life insurance is a problem to be solved for. And it was really, the idea was to build some really nice contemporary technology for actuaries. And I'll speak a little bit soon about as to how we've pivoted slightly away from that. But it's been a really successful story. We've obviously got some much loved clients in Australia and New Zealand, and in the last few years we've been able to expand into places like Japan, Hong Kong, going really well in the United States. And just before COVID, we sent Shelley Cox, our chief customer officer, over to Edinburgh to set up the office there, and she was, I think, there for about 2 weeks before the pandemic hit. But we are nevertheless making good progress in the UK without being able to actually physically see any clients, of course. Montoux is a tad under 50 people, spread around offices. Here in Wellington, we have Matt Ralph over in Sydney, and then we've got offices in Edinburgh and New York. So what is Montoux? Montoux is a SaaS platform. We call ourselves a decision science platform for life insurers. And our starting point really when we engage with clients is to provide technology that enables clients to build internal decision-making capability, right? So it's a technology play first and foremost. However, life insurers are at various stages of maturity, I suppose is the best way to describe it. And there are times where we will deliver those services on our platform because that's the best way to get the job done. As I mentioned, it was initially built to solve for this problem of pricing, and a lot of it was around efficiency. So the tools that life insurers use to price today, or certainly what they used when Montoux was formed, it was often Excel, but if not Excel, it was sort of some legacy systems that weren't really designed for pricing. And so we built something that was born in the cloud, super easy kind of user interface. And then what we found is that, well, actually, to really price well, you need to be able to take a predictive view. So we incorporate this whole data science element into the pricing process, which was very new and exciting. And a lot of our clients, that's what's appealed to them the most in the pricing space. And I think what we found over time was that, and this is probably a lesson really to all insurtechs, is that it's important to solve a problem for clients, but it's really also important to solve for the right problem. And life insurers have a lot of problems. That's certainly one thing that I've learned in my relatively short time working in the industry. And I think sort of Vanessa alluded to that before. There's places all across the value chain to add value, but it's important that your proposition is actually solving for the right problem. And what we've found, I think, over time is that pricing is a really good problem to solve for. It's the problem that a lot of our clients engaged us for originally and still will, but there's other quite large problems out there to solve for too. And what we were able to do by building this cloud-based sort of predictive analytics, AI-driven technology that solves for pricing, we've actually been able to now say, well, actually, pricing is not the only thing that we can solve for here. There are some really interesting, big kind of economic decisions that life insurers need to make that this technology can apply to, and are actually bigger problems to solve for than rate setting. And so we're in the midst of this kind of decision science, as we call it, pivot. It's a really exciting time for us. It's opened up a lot of doors outside of the traditional, I suppose, actuarial channels that we had typically dealt with within insurers. And it's just a super exciting time to be at Montoux, really, because just a whole lot of interesting conversations happening. And the great thing about these sort of conversations is that you don't actually really know when you're talking to executives about this sort of stuff where the conversation is going to go. So, you know, as someone that comes from a sales background, that's really exciting, because you get pulled into all sorts of new and interesting places that you can't necessarily see before a conversation starts. So the sort of problems that we solve for, well, we typically like to think about them through the sort of lens of a life insurer. So there's one bucket around kind of, I suppose, new business growth, which is typically where our existing pricing proposition would fall. We might provide predictive analytics around how you might understand kind of advisor, you know, sales and distribution behavior. But increasingly what we are looking at is what's called the in-force kind of portfolio of life insurers. And life insurers just carry these, you know, mind-boggling in-force books, right? Just millions and millions of dollars of value tied up in their in-force portfolios, and without a particularly sophisticated way often to maximize value. And so what we've been able to do is apply our technology to some of those in-force use cases, which might be around understanding customer lifetime value or retention, or offering, particularly in the US, we see the opportunity to sort of optimize in-force products by potentially sort of tinkering with the product offering that a client has. And the scope of value that we can offer through that sort of service is really huge. You know, you're talking 10, 20, 50 million dollars of value sometimes that can be found through using Montoux technology to that sort of use case. So you know, it's really exciting. It's from a technology perspective, the AI is really important, but you know, Vanessa mentioned the use of third-party data before, and that's something that we find is just absolutely key. So the insurers typically have policyholder data. They often have policyholder data in very unusable forms, to be fair, but they will have policyholder data. But what we're finding is it's the ability to match that policyholder data with third-party data sets, which are in much better condition and are obviously increasingly vast. And you can do some really, really clever things there around understanding customer value and being able to predict, you know, what certain interventions will have on a customer. And that's increasingly where we see our technology being applied. What else do I have? So yeah, I guess just to wrap up, I mean, we overwhelmingly see that insurers want to do all the things that the McKinsey reports say. If you want to understand what direction life insurance is going in, just read the McKinsey reports. The clients that we talk to want to do all those things, but it's a question of actually, well, how do you do them? And for life insurers who are quite traditional and quite conservative in the way they approach their business, it's actually quite hard to implement some of the stuff. And really, what we try and do at Montoux is make those kind of objectives achievable and allow them the capability to do all those great things. Sorry, Jason, hopefully I didn't go over time there.
It's all right. We were probably a bit ambitious having 5 people to speak today, so we'll see how we go. Look, there were a couple of points, Julian, you mentioned about analytics, data science. I imagine there's a lot of lifting the hood inside your customers and looking at their data. And it might be that we come back to this challenge for insurtechs to work with incumbents, where there's a real need to access customer and consumer data to then apply your technology and solutions to. And I suspect that's a challenge not only for our sector, but others as well, of course. Perhaps we can circle back to that later on, because data is certainly close to my heart. Okay, I'd like to move on, and we'll circle back later on to Julian. Let's move on to Tig Murphy. Tig has joined us from Sydney, Australia. He's the sales director for inQuba. Tig has worked in the past with Forrester Research, where he engaged the ASX 200 and government bodies to help them drive a more customer-centric business model. Later on, he was with Tableau, where he helped organisations democratise data and solve a wide range of business problems by leveraging the data in the disparate systems. Tig is currently in inQuba spearheading sales and operations to enable organisations to adopt a journey management approach to improve acquisition and retention rates. Obviously very important. The inQuba SaaS Journey mapping platform helps insurers optimize customer engagement, balanced against driving optimal business efficiencies, particularly addressing important issues such as lowering customer churn, obviously very important in the life and sector. Welcome, Tig. We look forward to hearing what you've got to say.
Thank you very much, Jason. Can you hear me okay? Perfect. Yeah, so I came across inQuba back in November last year. The founder, Mike Renzon, was introduced to me, and he put forward this solution called Journey Management, which, to be honest, I had not actually come across before. And he kind of shared with me the value proposition of the solution. Now, I'd obviously been working with Tableau at the time, so I had a fair bit of understanding around the challenges that businesses were facing with data. And at Forrester, 4 years chatting to heads of customer experience, heads of insight and analytics, I kind of understood the challenges between the business and the data world. So in a sense, he sold me the value of journey management, and I'm happy to jump on board. So the company itself was founded back in 2010, actually as a customer experience management platform. And in recent years, we've pivoted to become a journey management player. Now, that shift was in response to this growing sentiment in the market that customer experience metrics, such as Net Promoter Score, was not delivering the exceptional business results that were once promised. So I think if I can share a quote from Julio Hernandez from KPMG, he wrote that customer experience has become a religion and not a strategy, which I think is I personally like it a lot. I think it encapsulates the degree of economics in some of the business decisions that have been made across industry as it relates to driving business growth. So inQuba's working hard to bring data and science back into the mix to help organizations improve acquisition and retention use cases or problems. Now, the success that we've had with the insurance industry can be attributed to the effectiveness of journey management, improving or rather solving one of the industry's deepest challenges, which is churn. Now, as Julian kind of touched upon it, as well as the McKinsey report, life insurers have some systemic business challenges. Improving the loss ratio score, mental health claims, and trying to model and quantify them, finding a competitive incentive structure for advisors. Now, we see that obviously all those need to be solved, but at the end of the day, your customers is what runs your business. So a short to medium term solution is required, and it's imperative that we understand who are those customers that are high risk and high value, and ensure that those are the priority and that they do not churn. So then the question becomes, well, how do we actually identify who those customers who are high risk and high value? What do we do to ensure that they don't churn? And what is the forecasted financial benefit that we will recuperate? So what the inQuba platform does is we pull customer, operational, and experiential data from the disparate data systems into the platform, and it provides a bird's eye and holistic visualization of how your customers are navigating through their journey, how are they feeling throughout that journey, and where exactly are they lapsing. So once we can visualize the transactional or the behavioral path that each customer has taken, we're able to see the preceding sequence of events that led to a specific lapse. And then we want to get an understanding of the emotional context or the emotional journey that the customer feels throughout. And it's actually the combination of both the transactional journey as well as the emotional journey, which provides us with an accurate diagnosis as to why customers are lapsing, where the specific hotspots lie, and what is the potential remedy that we need to implement to reduce churn. So in a sense, we've done the diagnosis, and by leveraging the data, we understand the status of your customers as they engage with your business. We then want to move to prognosis. So through AI and machine learning, we send out contextual and personalized engagements, or what we call digital nudging, to help customers move from one step in the journey to the next, helping them navigate difficult barriers or roadblocks, and ultimately helping the customer achieve their desired goal. As you've mentioned McKinsey quite a number of times, I'm not referring to the report that everyone most likely has read, but there's a research report from, I think, back in 2013 or 14, where they provided evidence around that organizations who adopted and executed on a journey management approach delivered a 30% improvement in acquisition or retention, depending on the use case. And as a byproduct, customer experience also improved. So as you've most likely realized, this is an iterative approach. The platform continuously learns about your customers over time, and then the results compound over time. So you may be asking, well, what does this actually look like in real life? What is the practicality of the solution? So working with a large life insurer here, they had concluded that the road to profitability was to double down on acquisition, and to reorganize their business around that goal. Now, by the time that we had engaged with them, they had achieved their yearly acquisition targets, but were relatively frustrated that their profits remained stagnant. So after a couple of conversations and an investigation of their data, we uncovered that although they were hitting their acquisition targets, their 25% churn rate was having a detrimental effect on their bottom line. Now, even after we extracted the cohort of customers who could be classified as not right for them, i.e. there was another product or another company or another life insurance that would have served them better. Even when we extracted that cohort, there was still about an 18% churn rate. So we wanted to uncover, who are these customers? Why did they lapse? What could we have done differently? And if we were to implement, certain strategies and certain rules, what effect would that have on retention? So we ran a number of workshops uncovering some of the assumptions that the stakeholders had made, and we mutually agreed that a target retention score of about 90%, 90, within an 18-month period was feasible. Now, in an effort to sell the idea and sell the value of the solution to the CFO, we co-created an ROI calculator, which was then presented to the CFO. So after we deployed the platform and pulled in the required data, we could immediately see that 40% of the customers that had made a claim in the past 5 years had churned. So our first call to action was to create a number of rules where if a future customer followed the same path, we would intervene, and we would intervene with a digital nudge, or the contact center or the call center would reach out to them. Now, what we saw from that was, ultimately we were trying to understand what would happen next. Now, the second call to action was to get a better understanding of the customers who are classified as passive, which, you know, it depends on your definition of passive. They were defining it as one or less interaction from the customer over a period of a year. Now, marketing had been sending out content to these customers, but they really struggled to understand if what they were sending out hit the spot. And they were certainly unable to understand the correlation between what they were doing and either an uplift or a decrease in retention. So we actually released our recent capability called conversational analytics, which is ultimately a WhatsApp capability where a client can have a bi-directional conversation with the customer. We can also send it to the financial advisor, who then sends the link to the customer, to the end customer. Now, all the interactions or the engagement from the customer is then kept within the platform. So ultimately, we're picking up breadcrumbs of data to get an understanding of the type of persona that customer is. Now, after 18 months of continuous iterations in both engaging with the passive customers, as well as helping the engaged customers achieve specific goals, such as advice or a claim, etc., we're able to decrease the churn rate from 18% to 10%, achieving the pre-agreed target of 90% within 18 months. So just to conclude, one of the biggest learnings I've had from my limited experience with life insurance is that churn is a really complex problem to solve. It's a multidisciplinary problem, meaning that, you know, you can't just blame marketing, you can't blame sales, you can't blame product, you can't blame the tech. It is everyone's problem, and because it's everyone's problem, it requires a multidisciplinary solution. So in order to achieve the conclusion, you need to get alignment from the diverse stakeholders, and how you get that alignment is with data. So yeah, I'll leave it there for you, Jason. Thank you.
Fabulous. Thank you so much, Tig. I actually haven't heard that word digital nudging before. It's just beautiful. And, you know, addressing a really genuine problem of customer churn is the nub of back-end efficiencies. I mean, it seems to me that in life insurance, capturing customers, keeping them loyal, and not losing them is a really important financial benefit. And without doubt, back-end, this isn't just customer experience, this is back-end systems that actually work together in unison to keep customers happy and engaged over time. Maybe we come back to that as well later on if we have time. Thank you. I'd like next to introduce Aurora Voss from ClaimSpace. Aurora, again, has joined us from Sydney today. We've been really pleased to see Aurora join us for other InsurTech's event, in her role as both a board member of InsurTech Australia and also as the CEO of ClaimSpace. Aurora has a strong background in venture development, and this has helped, I'm sure, with the co-development of ClaimSpace over the last couple of years. Aurora and her team have set out to revolutionise the claims space, and in particular provide a collaborative platform to help manage the claims experience for customers by providing insurance companies and their teams the right tools to engage, support and empower customers. We look forward to finding out more. Welcome, Aurora.
Thank you, Jason. Thank you, Vanessa, for that intro, and to my fellow co-founders and technologists out there. It's been really great to learn more, especially Julian about Montoux's pivot. It sounds like a really exciting direction there. So thanks everyone, and for everyone listening in. So look, already in the couple of discussions that we've heard, there's a lot of talk of, churn and some of those older ongoing problems in life insurance. And at ClaimSpace, we're obsessed with these problems. And as the name says, specifically claims and dispute resolution within life insurance. The origins of ClaimSpace wasn't from me. I've always had a thing for claims because I've made so many in my life. But in fact, my co-founder and now COO, Gilberto Spencer, he worked as a medical and disability claims manager for a number of years, both for insurance carriers, but also for third-party administrators. And it was really his experience as a claims manager that led to what is now ClaimSpace. In his role in both, starting out as a claims handler and then managing larger teams, he'd used so many different technologies, everything from those homegrown core legacy systems to third-party claims management systems and everything beyond that. There's a lot of fraud detection tools and chatbots out there. And those things are really great niche tools for very specific parts of the value chain. But Gilberto just found that him and his colleagues ultimately were spending sometimes more than 80% of their day not assessing claims or really digging into the whys and wherefores of dispute resolution, but just gathering evidence, just playing phone tag with customers, just trying to understand where all of the stakeholders were, who they were, trying to work through. Anyone who works in disability knows that, there's so many individual pieces of evidence or requirements that need to be gathered together just to even begin to understand whether a claim is valid. And so that was really the experience that started ClaimSpace. And more broadly, as Vanessa painted a really great picture of the last 10 years of InsurTechnology, InsurTech. And the truth is that if you didn't know insurance that well, you would kind of look at all of the new technology from the outside and think, great, dispute resolution and claims is really getting somewhere because we've got chatbots now, and we hear all these success stories about insurers who let their customers snap a picture of that car and the ding, and then, wow, AI and machine learning just reads it and it's done. But there's not a whole lot of talk about how this is happening in life insurance, and there aren't actually a lot of tools that cater to this stakeholder and engagement issue within what is such a critical sector within insurance more broadly. And I think that's another big passion for us at ClaimSpace. I think we're really focused in on those really complex and juicy processes, particularly in claims, disability claims, income protection, trauma, as well as, death and even business expense. So that's where most of our bread and butter sits. Now, more specifically around the actual process, I'd like to talk a little bit about how things happen right now when it comes to claims and dispute resolution within life insurance. Typically, there's a lot of focus on sales and distribution. How can we make that process simple? How can we get to understand our customers better so that we can deliver these experiences faster and in a way that they can better understand? And many insurers have begun to achieve this, or parts of it. But ultimately, I reckon, just anecdotally, when I look at websites, 95% of insurance customers, of life insurers, when you look up claims on their website, it's going to say the same thing. It says you can make a claim on your policy by speaking with your financial advisor or your broker or your agent. Or if you want to make a claim, you can call us directly. Or it'll offer up the customer a list of different PDF documents that they ultimately need to decide which one is right for them. Sometimes they'll be asked to download those and print them out and, email, fax, or mail them. So that's really where we're starting from. That's the real problem that we're looking to. And even life insurers who there's few of them, but some have solved for electronic first notice of loss. Ultimately, for a customer and third-party stakeholder, that whole claims management or dispute resolution process, it ends up in your email inbox. We all hate email, let's all admit it. But it's particularly frustrating when you're a stakeholder or a customer trying, with a disability or, who's had some kind of accident, trying to manage what is ultimately a complex multi-month experience. And the reality is that customers don't like it, but claims handlers and managers, they don't like it either. It's incredibly difficult to manage a portfolio like my co-founder did of 100 to 150 complex claims and sort of have to rely on email threads and missed phone calls. So look, what we do, I should get to that. ClaimSpace, we provide insurers with the tools that they need to digitally transform all of these interactions, right? With policyholders, with beneficiaries, third parties, internal teams, everyone in the supply chain. We have a white labeled no-code platform that focuses on dispute resolution. And I say dispute resolution because we not only help insurers to transform the way that they do claims, but also complaints, internal and external dispute resolution too. And the platform allows business users, and that's important because it's a no-code platform, and we really believe that the people interaction with your customers should be the ones who ultimately get to design these processes. And it lets those business users to configure these kind of end-to-end experiences. So everything from online notification to settlement of the claim. And it ensures that information is automatically shared with all of the stakeholders involved. So brokers, financial advisors, even healthcare providers or any other party. So, but I think an important point to make is that, sure, there are some insurers in the life insurance space out there who are ready to go like 100% digital, but there's a lot who aren't, and for good reason. There's a lot of lines of business, a lot of different customer segments, and not everyone's ready to just, no human touch, and it's not necessarily the right thing for this sector of the industry. So our platform supports insurers to do it the way that their customers want to. So we have a number of life insurers who, while they use our platform internally 100% for that day-to-day interaction with everyone, it still allows you to track claims that perhaps are still done on paper, or FNOL that's still done over the phone, or even sometimes in person back before COVID. But what's important is that we support an insurer at all stages of digital transformation. So not only can claimants, they can kickstart their claims online using smart devices, they can securely share all of the evidence requirements related to a claim, as well, with their TPA or even broker or agent, if that's, the intermediary who is helping them to solve for this. But our system, what it'll do, it allows you to build these configurable workflows, but to automate repetitive and predictable processes, ultimately freeing up your people to do what we all just want them to do, which is support customers and other important stakeholder groups. And I think that's another thing, Tig, you made some excellent points about, customer experience broadly. And I think particularly when we're looking at life insurers in this sector, your customer, if you're a life insurer, your customer is the claimant and the policyholder, but your customer is also financial advisors and brokers and agents and, all of those incredibly important stakeholder groups out there. And that needs to be considered too. Any tool that is used must cater for these groups, because they're such an important part of the supply chain and ultimately an important part of the customer experience. So we, some of the most super users of the ClaimSpace platform are those people. So brokers, lawyers, financial advisors. So what underlies our platform is the idea of this customizable workflow. We also have integration capabilities that mean that insurers can use the platform to enhance or augment existing core systems. And ultimately, that's important about ClaimSpace. We're not a core management system, right? We don't rip and replace those big systems. We come in and we sit on top of them to try and free up some of that capability. But, a note on integration, because there might be some of you in the audience that are chuckling to themselves anytime a startup founder mentions the word seamless integration. I always do. The truth is, we have some life insurance customers who are using third-party external core systems. And in that case, it's quite straightforward to integrate, right? But the truth is that a lot of you out there have different lines of business on different systems. And sometimes integration is simply not possible. Certainly seamless integration is not possible. So
it is a big challenge, isn't it, Aurora, that whole area of integration. Hey, look, if you could just give us one or two quick points so we can grab hands before the session runs out.
Yeah, for sure.
Sorry.
No, I can go for ages. So I suppose all I want to leave you with is where we're at today. So we're working with life insurers in the US, in Canada, South Africa, and Australia. Our platform manages any kind of dispute resolution process within the sector. So everything from, you know, funeral, death, business, income protection, all of those ones that everyone here is familiar with. And we're seeing some really good results. So there's some obvious things that we impact, like customer experience and utilization, as well as that from stakeholder groups. But ultimately what we're going for is to decrease the number of inbound calls to that claims business unit, reduce indemnity. We're trying to, you know, free up the claims handler capabilities and increase efficiency there in their portfolios. So I'll stop there because I could talk all day. But yeah, I would thank you for all of your time and attention. And I'm excited to hear more from Hans. Thanks, Jason.
No, pleasure. I certainly don't want to stop you in mid-flight, because last time you spoke at the Insurtech's claims event, you were just fabulous and we really enjoyed your insights. It does strike me, funnily enough, I used to be a family therapist once upon a time. I won't disclose that too much. But one of the things that really gets people's buy-in is transparency and the ability to understand processes. And what struck me about ClaimSpace is to take what are quite often mechanical tasks and to make it accessible and usable for different audiences seems to me really important. Anyway, look, we'll press on. I'd like to introduce Hans Frauenlob. I hope I got that correct, Hans. No, sorry, you can correct me. Sorry about that. Hans is the co-founder of Sentro. It's a fabulous New Zealand insurtech with a dedicated focus on helping group insurers with their their insurance businesses. Sentro provides a group insurance administration platform that not only helps manage the administration process, it improves the end customer experience. Hans comes from a background in operations, information systems, and international business development, which is naturally very fitting and has helped Sentro expand its partnerships outside of New Zealand. Sentro has been winning accolades across multiple environments in the insurtech space, and we look forward to seeing them in action in Abu Dhabi soon, I believe. Hans, and I believe you've also been picked to join the FinTech 100. It's quite an achievement. I'll hand it over to you. I think we should all go over a little bit today, and I'm sure that Otters, who's on the line, will let us do that. Thank you.
No, thank you very much, Jason, and thanks everybody, and for hanging in there kind of late in the day on day 3. So I'll just whip through this really, really quickly and invite you to contact me at hans@sentro.co if you've got any questions afterwards. So as Jason said, we're a New Zealand-based insurtech group policy administration platform. We've got a couple of great customers here in New Zealand. We're actively prospecting worldwide. Now, group insurance, it's kind of the underloved bit of the insurance book, and there hasn't really been that much technology specifically designed for end-to-end operations. And we've talked a lot today about the customer experience, and we believe absolutely about that. The interesting thing about group insurance, and this is picking up on what Aurora was saying about brokers, but if you think about group insurance, you've actually got two customers. You've got the business owner that's buying it for the company, and then you've got all the people that are receiving it. So the service experience from the insurer through to the broker, through to third-party service providers, to the employer, to the employee, there's a lot of handovers there and a lot of places where it can come unstuck. And then along comes COVID-19, and all of a sudden, everybody in the world is suddenly thrust into doing digital business, whether they were ready or not. And spoiler alert, many not. And it's not just at the back end, but you think about all of the people that are along the service delivery chain, they're all affected too. So if you've been used to walking into a customer's premises to do a presentation about your group insurance product, and all of a sudden, you can't get to the customer premises anymore, you have to find a different way, not only to educate, but also to fulfill, to service. And that's really what our platform is all about. And so we believed from the beginning that the conduit through to the employee via the employer in the group insurance sense was been really, really under leveraged. And we think it can be so much more. We're trying to enable insurers to enhance their propositions with non-insurance value-added propositions to create stickier customer relationships and make it easier for them to differentiate their products and their service experiences on the same platform. Same deal as many others here, cloud native, and so we were able to invent without baggage, and we pride ourselves on being very, very configurable and fast to deploy. So I'll stop there, but we're really excited about the potential in the group insurance space worldwide. Most of them have the same challenges, and we're here to solve them. thanks a lot for everybody, and I appreciate we're up against it time-wise, but great to be part of the crowd here today, and thanks for the opportunity, Jason.
Well, thanks, Hans. And actually, Otis has just come through and said we've got a couple more minutes. So you can, please, if there's more you'd like to let us know, here's your chance, because you might not get it again.
Oh, okay. All good. Well, let's Skype while we can. So we're actively prospecting, as I said, in multiple markets. And the drivers are remarkably similar, just about everywhere in the world that you go. But then if you think about that, then there's incumbents that are trying to modernize themselves. And then you've got new entrants that are trying to get to market quickly and cost effectively. So for us, we like to think that we can address both of those. So for the new entrants, we're a fantastic fit. Our business model and speed of deployment means that the new entrant can get going really, really quickly and cost effectively. At the other end of the scale, the large incumbents that are trying to modernize, if I was to leave you with one thought today, if you're an insurer in that boat, is don't fall into the trap of trying to digitally transform your entire business with one mega project. We think that that is just a bad approach. And in trying to get yourself into a more nimble, more cloud-driven business model, you don't have to do it all at once. You can attack it in pieces, and you should, because technology changes, but also, as we saw this year with COVID, business changes too. So put yourself in a position where you can do things a piece at a time and find yourself partners that can work with you that way.
Thank you, Hans. Look, we've had a question come in, and unfortunately time is a bit limited, but the request was to hear more from Aurora from ClaimSpace, and I'm proposing that, Aurora, if you pass over your email address, and in fact any of you can do that, then people please feel free to get contact directly. You can obviously go to their websites, find out more, or maybe LinkedIn, of course. Look, what I would like to do in final closing is to say thank you to all of you today for presenting. I'm sorry we haven't managed to get to a bit more of a deep dive on the state of InsurTech and where the world's going, and a bunch of other factors that are actually quite common and different between you, and just circumstance today. But I would like to say thank you in particular to Vanessa for your presentation, Julian for giving us more insight to our Kiwi success story, Tig for your insights around data, certainly close to my heart, Aurora for your insights about the claims process, and finally Hans for telling us more about group benefits. Thank you all for coming along today. Wish you all well, and I'm sure we'll see you at some future event. Thank you.
Thank you.
Wow, what a range of insightful discussions there have been. I'm sure you had some difficulty choosing which session to attend, but then again, that's what's great about digital. They're all recorded and available to watch on demand at your leisure. There's no fear of missing out here. And so I guess that this brings the FSC conference to a final close. In a year full of uncertainty, adaptation, resilience, and agility, I think I can speak on behalf of the audience and say what a fabulous 3 days it has been. You have been an engaged, enthusiastic, and totally delightful audience, and we are very thankful that you have been here with us. I'm Yvonne Davey, Manager, Super and Savings, Craig's Investment Partners, and I have been your MC for day 3. I've thoroughly enjoyed sharing the show with you today. Thank you to the team here in the studio, and have a good night. E noho rā. Wow.